Hello and welcome back to Property Matters on Dublin South FM with myself, Carol Tallon. You can contact us on social media at iPropertyRadio or email hello@iPropertyRadio.com. Next up today, I'm joined by Max Scott, CEO of Star Property Group. And Star Property Group currently has a portfolio that's valued in excess of 80 million. Max, you're very welcome. Thank you for joining us today.
My pleasure. Thank you for having me.
Max, just before we started recording, we were trying to recall having met a number of years ago, and actually quite a lot has changed in the marketplace since we sat down together a number of years ago. So first of all, maybe explain to people Star Property Group. What does Star Property Group do?
So the Star Property Group is the investment arm of the Star Group. So the Star Group has its roots in the betting industry. And when I first met you 4 years ago, we hadn't actually bought any property in Ireland yet. So my role is to grow the investment side of the business. And as a result of that, we've started several trading businesses under Star Property, which will help us both in terms of execution and in terms of when we scale up more and more and more. Which our growth trajectory is quite quick in the last couple of years, they'll support that. So we've got Star Law, we've got Star Construction, insurance. They're just things that make it easier to invest a huge amount of property in the future, which is where we believe we're going.
You know, there's something, I think your business model is really interesting, and the approach to it is something that sometimes can happen very organically. So I think it's a little bit like Steve Jobs might have referred to when he talks about kind of how it's easy to join the dots working backwards. Whereas for you guys, you did this very strategically from the start. So in terms of, talk to us about, I suppose, the early days, because getting to where you've gotten now, you can see where the strategy comes into play, but obviously funding that in the early days would have been quite a challenge. So maybe talk to us just about kind of the early start.
Okay, so the roots of Star Property. So I was working at Star Sports, the betting business, and it wasn't really for me. I was interested in it. I learned a lot, and I saw an advertisement of Rich Dad Poor Dad, Robert Kiyosaki, and I thought, oh, that looks interesting. I'll go along for a free property seminar. And I'd made enough money and saved, and I put all my savings into property investment courses and seminars off the back of that initial ad that popped up on my Facebook. And I said to the current majority owner of the group, look, I'm going to go and do this now. And they had one flat and one shared house, or no, a couple more than that. But he said, well, why don't you stay and do that with me? And in the early days, yes, okay, we developed a couple of properties, and we did a couple of properties a year, but it was very, very small. And then I remember it's 2015, I did my first cash purchase and a title split, buying a block of flats and splitting the titles to sell individually, but we actually just remortgaged them individually. That's not something that's overly common over in Ireland, actually. And then from sort of 2017, 2018, we've really grown rapidly as the business has launched online, etc. There's a lot more avenues of the profit-making side of the business now.
Certainly the growth over the last 4 years has been phenomenal, and yet that was happening in a marketplace where much more experienced investors and experience not just in property investing, but actually in the investment market in Ireland might have thought that those opportunities didn't exist. So just talk to us maybe about some of the deal flow over the last 4 years. And by the way, I love that you started the interview by referring to Robert Kiyosaki, because I know then we're on the right wavelength.
Yeah, great. So the question was about our deal flow over the last couple of years. So I get this sort of deal anxiety when you haven't done a deal for a couple of months, and when's the next deal going to come from? And I realized this point last year that actually the best way to get deals is to do deals. So if you're constantly doing deals, deals will find their way to you. So the most important thing for me is doing what I say I'm going to do, because and there's so many people that muck agents around and sellers around, it's a short-term game. We're looking at this with a 100-year view as a generational company. And so when I say I'm going to do something, I've got to be able to do it. Having flexible funding options, which mean you can get deals across the line, that's really helpful as well. And I think the biggest thing about finding deals is looking for an avenue to add value that other people have overlooked, or certainly most people.
That's a really powerful way to summarize a whole career of learning. The best way to get deals is to do deals. You know, it goes beyond integrity as well, because there's a research phase that people go through, And that's something that to be honest, I've spoken to countless investors at the research stage. And one thing you know very quickly is that all the ducks rarely line up. That actually you can, a lot of the skill of property investing, property developing is about de-risking property, but you can't eliminate all risk. You know, the skill is in de-risking, but there's a level to it. And I suppose I can maybe add a testament to you actually doing what you'll say you'll do, because actually our first conversation was very much off the cuff, and I had just had a conversation, not knowing you, I had just had a conversation with an estate agent in Dublin who had left his agency. And I had known that estate agent, or I'd known that estate agent because he was always seen as the go-to guy for off-market pre-63 deals. That's how I'd known him over the years. He'd had a conversation with me probably a day before I met you, and he said he had gone out on his own and he had these deals. And the next morning, I think you and I met in a hotel in Dublin, and I mentioned to you that this agent had these deals, thinking that one or either of the two pre-63s that he had at the time would be suitable for you. And I think I got a call maybe a week later to say, yeah, that guy's going to take the two of them. So it's like, great. And actually, in a way, there's quite a shortcut to figuring out who people are in the marketplace when you see how they operate, you see how they act. It's much easier than spending months and years trying to learn about somebody, how they operate, when you actually see them operating in practice. So that was a really interesting, that was an interesting one for me, because the meeting I had with you, I have probably had 30, 40, 50 very similar meetings where I mentioned deals that had been mentioned to me in the week before. And it's just, to me, that's the recognition of somebody who's past the research stage. They're ready to jump. And more importantly, they recognize a deal. Because one thing that I see with, I won't say reluctant investors, hesitant investors, is that they're always looking back at the deal they missed out on, and they don't understand how it impedes the deal flow in front of them. So I think that that's a really interesting one to look at. But actually, because you mentioned Robert Kiyosaki, you've probably seen that he is not bullish at all on property at the moment. He doesn't understand why anybody would be buying in the current market. So what's your take on that?
Well, I think he's been saying a lot of things for a few years and making some statements about crashes that would come in 2016, and then it was 2018. And so my thing is, you've got to time things very, very well. And the example I always give, and this applies far more to the UK than Ireland because the crash was so much more severe in Ireland. But in the UK, let's say you were really clever and you predicted the market crash, and you did so in 2005 or 6. By the time 2008 and the crash comes, the market only falls to the level where you would have stopped buying anyway. So to time it perfectly is nearly always going to be impossible. So I wrote an article at the beginning of COVID, property booms as the recession looms. And I was really nervous about how things were going. I just bought my own main house as well. And we just agreed that we have to lower our risk, but keep buying, because it's very, very hard to predict markets. Economists don't do it correctly ever. There's always someone that predicts it correctly, but that's because people have different viewpoints. So really,
is there an element though that if you predict the same thing for long enough, at some time you're going to be right? It's a little bit like a stopped clock. It's going to be right twice a day anyway. And there was an RTE economist that was always throughout the Celtic Tiger. It was always said that he predicted 7 of the last 2 recessions, because he predicted recessions all the time. That on 2 occasions he was right. But that there, part of this is, if you say the same thing for long enough, you're probably going to be right at some point.
Absolutely. I think the main thing is to protect yourself. So don't buy something at what it's worth and have no cash flow hoping that the market's going to go up. That's crazy. But if you invest for cash flow, not for upside, you can rely on inflation, because it's something that's so fundamentally important to the economy, and that governments want and need it. So they're always going to try and ensure there's a little bit of inflation, which is going to erode your debt and protect you. Long term, if you invest for cash flow, you've got good rental coverage, you should be relatively safe.
Okay. I want to take us back to Star Property Group and the work that you're doing. You describe it as an end-to-end property solutions company, but what does that mean?
So basically, I think a lot of the frustrations that I've had over the years in dealing with external providers solicitors are a very big one. You know, if you leave things to solicitors and accountants, often you won't get anything done. So what I feel like I have a lot is solicitors saying, oh, or they're an agent chasing me, our solicitor's waiting on your solicitor. And I call them and say, yeah, we've had something in 5 minutes ago and we've been waiting on it for weeks. And there's never clear communication. And so I was getting a bit frustrated with this and frustrated with the free solicitors. And I thought, I want them to work for me, not just me to be their client, but if they work for me, I run a sort of and the background owner in the business as well, then I'll be treated slightly differently. And so I came up with an idea of how to structure something to get started with the idea of a legal firm without much risk. We put that underway and it started making quite good money. And then we decided to acquire a fully fledged legal practice. That's in the UK, not in Ireland. We do still use a lot of external solicitors, but it just started the idea of, with our volumes, we can start a business without having the same startup risk that most people have. You know, we'll save money in-house, therefore we can't really lose that much money, and we've got big upside and core expertise. So it's very strategic. If we don't make any money, but we increase our core expertise and execute our current deals better, that adds a lot of value to us. And then when I started realizing that, I thought, what else can I start? And so I slowly started piecing these businesses together. So now it means that, so we've bought about 35 million pounds worth of property in about 15 months. And what if I have to buy 50 in a year or 80 in a year? That's going to be really hard because we don't like buying big fancy things where yields are lower. We want to work really hard and graft out a better return. That's only really going to be possible if you've got a strong in-house team to support you. So now we've built that primarily for ourselves, but because we are investors as well as business owners, we understand far more aspects of how those businesses should run and what's important to investors, that we're really well suited for portfolio landlords to work with us and investors to build their portfolios as well.
Shoring up the supply chain, in a way, that's just another way of de-risking the investment. You know, it's something that we see quite a lot across the construction industry, and maybe we haven't seen as much in property. But one of the things that I'm particularly interested in, as a UK company, you're not just obviously active in the UK and Ireland, you're across the Isle of Man, Montenegro and Tel Aviv. So just really, because I think it's important for Irish policymakers and for people in the Irish industry, you know, we can do a bit of navel gazing. You know, it's good to understand what the perception is outside of Ireland as well. You know, given that being a landlord in Ireland has become so burdensome that there is quite an unfair tax burden when you split across, say, private and institutional landlords. You know, it's not, we've become increasingly not just balanced in terms of landlord and tenants' rights. You know, we've really swung the pendulum in the other direction, that actually landlords are really not very protected in the marketplace at all. And we have a market that doesn't evict tenants for non-paying payment of rent and things like that. So as an investor looking, you know, obviously geography is not an issue for you. You can look at many jurisdictions. What in Ireland is attractive and maybe what is less attractive or potentially worrisome for the company?
So what's attractive, I think, about Ireland, there's a couple of different things. What I think is everyone seems to talk positively about Ireland around the world, and I think that's really important. It's also got a lot of potential in terms of it is the foot in the door to Europe for American businesses and tech, and that's where a lot of the development and growth has been, is from these companies coming in. That's more people coming in with good earnings and spending, and that sort of develops the economy as well. So it's very uniquely placed with a low tax structure and then the foot in the door to Europe with English speaking to provide that. So that's one of the big positives. I also think that it's very hard to get a yield around the world. Everyone talks about the hunt for yield and the hunt for income. And if you're doing the right types of property in Ireland, and if you're doing it well, I think it's really well positioned to get good incomes. And when I first went out there, we built a decent portfolio. It might have been, let's say, 5 million euros. And we were still struggling to find any finance which was below 5 or 6% at 50% loan to value. And Euribor, so the interbank rate from Europe was negative. And I'm like, how is finance so expensive here? And of course, maybe there's not a huge amount of banks and competition, and their balance sheets were so hurt during the crash. I thought that doesn't make sense worldwide. Our borrowing rates were probably less than half of what yours were for certain types of property. And as a small to medium investor, you could not get good finance. We're now in the club of getting good finance from bigger banks because we've got a bigger portfolio. But that took some time. And I just thought, well, if the loan to values go from 60% to 70% and the rates go from 6% to 3.5%, what's that going to do to returns? It's going to make them go up. What's that going to do to property prices? It's going to make them go up. So I think fundamentally, there is still a lot of room in the market for that.
Okay. The finance is an interesting one. It's one that comes up here time after time. And actually, there's still, Ireland's finance market is exceptionally small. So are you saying that you're dealing primarily with main lenders now at this stage?
We are, but even with a £5 million portfolio, we weren't. And that was unencumbered at one point, and it was being mucked around by different banks and then changing their minds, or we found it really, really hard work. I mean, banking in general and getting mortgages over the line is hard work, but I've accused them in the past of death by paperwork and things like that, and being responsible for a lot of deforestation in the Amazon. But when I was getting frustrated, but there isn't a huge market, and I think more competition and more confidence and better balance sheets will make financing cheaper and easier.
Given the business model of Star Group, is this something that you've explored?
We have on several occasions, both in setting up a private bridging lending, both in doing our own private bridging, and in last year we had a couple of conversations about acquiring a bank, and I was really excited about it for all the reasons of potential. The bottom line is we just didn't have. We could have had the money to do it, but then not and invest as well. And it just wasn't our thing at the time. It's something that we might do one day, but the amount of money you need was far higher to really give it a good run. And it was a much more long-term project. So it's just not for us for now. Okay.
And do you think that that's the same rationale that's keeping other competitors out of this jurisdiction?
Not really, because I think we came to that decision. We pummeled all our money into property investment and growth, and we've got other investments as well, and money's gone back into business, but we haven't taken a lot out. So 80 million after mortgages, that's not enough to start a bank, and it's for the people with hundreds of millions, and the people with existing banks, they're the ones that should be looking at it and going into that market.
Max, in less than a decade, the portfolio has grown to exceed 80 million euros. What is the long-term strategy? I started this interview by talking about how strategic your approach has been, not just in the Irish market, but overall, and not just in terms of property, but actually shoring up your supply chain. What's next?
I think that there's, in terms of our model, that there isn't really an end game. There isn't, when we get to this point, we'll start cashing in our chips. This is something that we see as generational. I don't believe in end games. I like, to play the game because I enjoy it. We want to do this because we can in many ways. And, I don't want to retire. I don't want to do any of those things. So it's about, I'm sure we'll change and evolve as we go along, but essentially we want to just continue doing what we're doing. So much of that growth has come recently. We want to just capitalize on that. Eventually we'll then start, reducing our debts or owning more in cash and doing things to diversify. In that way, we invest in other businesses, and we're looking to anything that has a strategic gain for the business and can generate a return on our money. We pay attention to. We try and learn about different things, and with where we've come from and where we're going over the last 5 years, it's evolved and changed massively, and that's when nearly all of the portfolio has grown in that time. So I don't know what will happen in 5 years, but we'll certainly try and be at the forefront of most things and pay attention to anyone doing anything interesting.
Okay, given that the growth has been so recent, and you said it yourself there, property booms as the recession looms. Given that the growth has been so recent, how are you feeling, I suppose, about the next 18 to 24 months?
I'm a little bit nervous. There's definitely reason to be nervous, but I think when you've got a lot, you can lose a lot, and that's sort of something that stays in my mind. But equally, you've got very high construction costs at the moment. So how far can a property fall when you are behind in the UK and Ireland on the number of houses you need? You've just taken in huge amounts of Ukrainian refugees. There's property that's needed for all of those people. There's a massive housing shortage in Ireland. There's hardly anything available to rent. Fundamentally, if you gave away land for free with planning permission, you're still not going to rebalance the supply of property very quickly. And so that has to support its price. You still have relatively low interest rates. You can still get a return on your money. So I think cautiously moving forward, having an eye on stress testing, what happens if rents go down, if your portfolio is vacant, if your interest rate goes up, what happens if there's a 10% drop in prices, a 15% drop in prices. You know, if you can survive all of those things, I think it's important not to try and guess the markets too much. There'll always be talk of a recession and there'll always be talk of a boom. But in terms of the 18-year property cycle, I think there's factors which mean that you can't call it the 18-year cycle, but is it going to be between 15 and 25? Probably. So I think you've got to pay attention at the moment. I do feel that there'll be a correction at some point just from how things naturally unfold over 2 to 5 years, but predicting when, there's normally a trigger, which like COVID, like Lehman Brothers going bust, or something that is very, very hard to foresee, which happens quite quickly. So when things are overheated, a trigger might happen. But essentially, I think governments are much cleverer at managing recessions these days. And I think the difference with the last recession, or the biggest recession, the financial crisis, was that was primarily a financial based recession. And provided the changes that we've made to the banking system mean that they continue lending, the biggest risk is that lending stops. If lending carries on, it shouldn't have the same level of crash as there is before. And I said that to a bank manager who pulled our lending as COVID kicked off. And I said, if you are one of 5 banks and you all pull your lending from everyone, you will cause a crash, because no one's going to be able to lend. Therefore, everyone's to borrow. Sorry, everyone's going to have to sell or not be able to pay as much for property, and you'll cause a crash and you'll cause your own balance sheets to get hurt. And he said, I know what you mean, but I can't. It's our policy. It's too risky to lend at the moment. So provided that sort of stuff doesn't happen, I think we'll be okay.
Okay. And Max, before we finish up, can you share with us maybe what deal flow is passing across your desk at the moment?
So we are focusing on the pre-63 market at the moment. The residential sector has a lot lower risk, I think, than commercial. We have just done a very big deal in commercial in Ireland of Ashbourne Town Centre. So that's taken quite a lot of our finances for a while. So between the UK and Ireland, yeah, we've got stuff in the pipeline, retail with residential potential in the UK, and the pre-63s, we've got a few deals lined up still, and we'll probably focus on execution for a month or two, and then we'll be looking at scaling up on those models again.
Okay. Are you looking to hear from any portfolio owners who may be wishing to exit the market, or maybe any agents that are looking to get deals closed before the end of this year?
Oh yeah, absolutely. So if you contact deals at star-property.co.uk, that will be the thing for deals, and portfolio landlords, yes, as well, will be very interested in conversations around there. And if you just want to keep up to date with what we're doing generally, it's Instagram is Star Property UK. My personal one is Max_Star Property, and we're on LinkedIn as well at Star Property UK.
You know, Max, we don't let everyone do that. I'm only letting
Oh, sorry.
I'm only letting you away with it because I know that you're as good as your word, and I think the business model, what you guys are doing, is really interesting. You're certainly ones to watch, and I look forward to having a conversation with you in 18 to 24 months' time, when we have started to see some of these cracks widen and to see how the strategies are holding up, because that's how we'll all learn. So Max, thank you so much. That was Max Scott, CEO of Star Property Group. Again, thank you for being so transparent and actually sharing some of the strategies, because sometimes that's the part of the conversation that tends to be kept private. So it's really important to share it. And that's it from Property Matters on iProperty Radio for this week. My thanks to the Hear Me Roar production team and to Luke Delaney on sound for Dublin South FM. You can get in touch with the show on social media at iPropertyRadio, or by emailing hello@iPropertyRadio.com. Until next time, thank you for listening.